If you've ever been looking for a unique gift for someone online, you may have used Etsy.com. And if not, you're not familiar with it, it's an online marketplace where you can buy unique gifts for people. And where my friend got this HODL hat, how cool is this? So you have individual sellers going on the platform and selling products. Now in this video, I want to talk about Etsy stock itself because I believe it's actually come down into a decent buying range close to the fair value, and I think it has potential to run in 2022 to around $240. So I'll talk about the narrative that I see playing out, the financials, as well as my valuation assumptions. Etsy describes itself as a global marketplace for unique and creative goods, and they make money by connecting sellers to buyers. And then with every single transaction, they're taking a percentage of that sale. And here's the breakdown of fees. There's a listing fee as well as transaction fees plus a processing fee. They also sell advertising. And if you look to Q1 earnings, you'll see that marketplace revenue makes around 75% of the revenue, whereas the service revenue is around 25%. Etsy also owns Reverb.com, which is a music gear resale website. Etsy also recently announced that they're buying Depop.com, which is a marketplace for fashion, so resale related to clothing. Then there's a couple macro trends that help Etsy in terms of narrative. First of all, you have e-commerce, which continues to grow. It is maturing, but it's still a massive market, and they're part of that. The second piece is that they're in the resale market, which is actually growing even faster than the overall e-commerce. So in terms of Depop and Reverb, they're actually in a faster growing market. And you can see this growth come in through Q1 revenue, which was up 141% year over year. The pandemic itself obviously fueled growth, but what's exciting about Etsy is the fact that it's unique items and the brand itself has a premium compared to, let's say, you're buying sunglasses off Amazon and you just want a cheap pair. You go to Amazon and buy wherever it's coming from for $10. Whereas if you buy it from Etsy, it's a special product that someone handcrafted and there may be a premium to that actual good. Etsy's clearly tapping into the fact that you're promoting small business and people, and you feel better supporting a small business versus a mega corporation like Amazon. I think the most important thing that Etsy has going for it is that unique brand. When you look at Walmart, Amazon, Target, they're all competing against each other just on price, really. There's no premium built into it. Whereas Etsy feels like a marketplace where there's not a large competitor. There is Amazon Handmade, but Etsy is the clear market leader when it comes to unique gifts. Something else I believe helps Etsy is the fact that they're on the side of the sellers. They're not competing with their own sellers. So for instance, with Amazon, Amazon also has its own product that it's competing with all the sellers that are on its website. Etsy doesn't do that. What's also exciting is that with the increase in sellers and the success of those sellers, it's kind of word of mouth where someone may start a business and they start selling on Etsy. If they're successful, all of a sudden someone else wants to become a seller, and you have this chain reaction that as they scale bigger and bigger, they're going to attract more and more small businesses. The narrative at play is essentially it's a growing company within a growing macro trend. Also the fact that they had a really good year in 2020, they're not playing defense, they're actually going on the offense and using that free cash flow that they're generating from a great year and going out and buying Depop. So they're extending the portfolio and investing back in the business, which is great to see. Moving on to the stock price itself, as well as market cap, which is sitting around $21 billion. Etsy itself as a stock hasn't moved too much this year because it had a larger run up at the beginning of the year and has pulled back to around this 165 level. Some financial metrics that are nice to see is the company is actually profitable. Hallelujah. For a high growth tech stock, that is very refreshing. So operating margin of around 27%. If you look to competitors as a comparison, you'll see Etsy is at the higher range of operating margin, very similar to eBay. What's surprising is Etsy itself as a business is more similar to eBay than something like Wayfair. The return on equity for the stock is 88%, which is extremely high. Although that percentage for the past 12 months is an outlier, you can see that over the years, their ROE as a percentage for the company is still relatively high. That higher return on equity percentage gives me confidence that management knows what they're doing with the assets that they actually own to return more net income to investors in the future. If you look at revenue, you'll see that 141% growth for the quarter year over year. That's not sustainable. but I do believe the company will still be growing at a rate of around 20% year over year. If you look at the growth estimates for earnings per share, the next 5 years, it's expected to be around 52% per year. So although the company does have a PE ratio that is considered higher at 47, they have the growth in earnings to back that number up. In regards to financial guidance and outlook, very similar to other companies that had a boom in revenue due to the pandemic, they didn't offer full year guidance, but looking at Q2, they expect a revenue growth of around 20% because of that base effect being much higher. But across the board, they expect increases in revenue as well as EBITDA. What's also good to see is that they're expanding their gross margin, because in 2019, their gross margin was around 67%, whereas 2020, the gross margin was around 73%. What's also great about Etsy is the scalability of the revenue, because if you look at the operating expense percentage of revenue in 2019 was around 55%, whereas in 2020, it's 48%. So as they increase their revenue, their operating expenses don't increase at the same pace, which just means more profits as the company grows their revenue. To summarize, we have a company that's growing their revenue, is expanding their margins, already profitable, and also reinvesting back in the business to grow their business even faster. Let's talk valuation though, because it is trading at a 21 billion market cap. So is that undervalued, fairly valued, and where do I see it going? When I did my own discounted cash flow using these assumptions up here and assuming a growth rate in revenue of around 20% for the next 5 years, a slight increase to their operating margin, and keeping everything else pretty much the same, I came to the conclusion that the value of the shares should be around $180 for fair value. So the value today, it is relatively fair priced. Taking a look at what it could potentially be worth in 2022 is looking at their projected EBITDA and using a multiplier for EV to EBITDA of 37, and then kind of using the same cash and debt that's on the balance sheet today to come up with an equity value of around $243 per share price at the end of 2022. When we look at the current valuation, I don't think Etsy is extremely undervalued, but it's closer to fair value right now. And what's great about Etsy and their current market cap of around 20 billion is I think there's potential room to grow that to 60 billion over the next 3 to 5 years. So we're talking about a multi-bagger because it's a growing stock that has growing earnings, and there's still room to the upside for it to continue to grow in its market cap. Whereas if you look at a company like Facebook that's already trading at $1 trillion, it's much harder to double in the next 3 to 5 years versus a company like Etsy. There you have it. That's my opinion on Etsy, and I think it's personally a buy at these levels. And if it goes down further, even better buy in my opinion. If you did enjoy this video, give it a thumbs up and consider subscribing to Main Street Wolf, where we talk about investing, stocks, option trading, anything to do with money. Thanks guys for watching, and have a great day.